Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading. Just kind of want to do a quick little update on the market, kind of looking at the market this week. Obviously, last week the market had a really good week coming in from that 2040 mark, up about 60 points already on the week. So a really good trading week. Now, not too unexpected. It was volatile, certainly, but not too unexpected as the market came down into a support level. Fibonacci 50% retracement level right there, popping back up, heading back up. At a minimum, should come back into the 2117 level as well. If it does break out of that level, it could run up into this range fairly quickly. So we are looking at a slightly bullish scenario here coming into the week in the marketplace. And if you want to look at, say, kind of what triggered a lot of this response last week in the market, let's go to the Clubhouse Trade Center. So we're going to tackletrading.com. We're then going to click on not the news. We're going to click on the Forex calendar there. That's going to take us to forexfactory.com. And so when we're looking here, let's look at last week in the market very quickly, just to kind of identify what happened. Last week we had the Japanese yen monetary policy. We had the U.S. dollar come out on Wednesday with their open market committee as well, and they came out and kept the Fed fund rate 0 to 0.25. They did remove the language of the patience, which we've talked about before. The Swiss came out on Thursday, held their rate at 0.75, which was as expected. So basically the major currencies out there, they kind of held their ground in terms of what was driving the market, what was expected out there in the market as well. So nothing really shocking in any capacity last week happened. And because even with the removing of the patience language, you had the Fed speech come out there and say, okay, well, we might have removed that, but it doesn't mean we're impatient. So it's kind of playing word games at the Fed, shockingly, I know. But at the same time, nothing really shocking happened last week. And when nothing really shocking happens in a week, you're just going to see standard movements. And had a higher high the week before, had a higher low, and as we can see, the market is going back up into resistance. So that's kind of what should impact the market when nothing really comes out there that offsets kind of what our expected analysis is. Now, in terms of the calendar, now let's look at this week in the market. Tomorrow, ECB President Mario Draghi is going to give a speech at 10 a.m. Eastern Standard Time. Don't think that's going to have too much. Don't think he's going to say too much that we haven't already heard him say many, many times. We're going to do whatever it takes, whatever it takes, whatever it takes. So if he says that, might be a nice little drinking game on how many times he says that. Obviously not here in the U.S. because that's 10 a.m. our time. But like Jimmy Buffett one time said, it is 5 o'clock somewhere for you guys out there in the world. Now on Tuesday, we got the CPI report, which is a major economic report. That is the composite level of inflation, the consumer price index. We also have new home sales coming on Tuesday as well. On Thursday, retail sales for the pound. As always, unemployment claims for the dollar. And then on Friday, we get the GDP number and Janet Yellen giving a speech on Friday. But Janet Yellen's speech comes right at the market close, so I don't anticipate that having much to do with anything on Friday. And GDP is a major economic report as well in terms of the final GDP number. The prior number came in at 2.2. That was for the prior quarter. This is the final GDP number. They are expecting a little bit of an uptick to in the 2.4% range. The final GDP number is not as important as the initial one. So you have three GDP reports that impact the price of the market. The last one, we already have kind of an understanding of how good or how bad it is. So this final one, we already kind of know, so I don't see it impacting it that much either. This is going to be a standard technical week. You might see the market come back into resistance. I think it will test that resistance level as well. We'll see if it can get back up above that level there if we have standard technical analysis. So if nothing shocking happens this week, I don't expect a lot of volatility this week. There's not a lot of major economic reports worldwide. And in the U.S., we're only really dealing with the CPI report, which is the inflationary report on Tuesday. Now, let's look at the other indexes out there. Let's look at the crude oil first and foremost. Crude oil basically had a break-even week last week, maybe upticked just a little bit, got into the low of 42.41 before it came right back into 46.5. This is really, I mean, technically you're in a downtrend still because the lower low here is lower than the 44.5 over here. However, it does feel like short-term neutrality to me. Look for this market to continue leading in the volatility of the market and the movement of the market. Let's look at the gold index slash GC. During the coaches report last week, I basically said that this could be a buying opportunity short term, given the fact that it was coming into this level here, and gold responded up until 1180. I do expect it to come into 1200, but this is still a lot of pressure on that. So another 20 points up into the 1200 on gold, and that's probably where we should kind of see that going. And then DX, the dollar index. You want to talk about some volatility in the marketplace? There was no more volatile market than the dollar index itself. We called it on the Forex report, guys. We said it's going to hold resistance at 100. It came back down a little bit, came all the way down to like 95 during the Fed event on Wednesday, responding back up into the 99.8. I mean, this was just the most volatile market that we had last week. It was down 1.5% on Friday. It was up 2% on Thursday. It was down right around 4% total on Wednesday. I expect it to be another volatile week in the dollar, but certainly not like we've seen here. It'll be interesting to see how the dollar opens to tonight and tomorrow, and I'm certainly have something to say about that on the Forex report as well. So expect that one to be really volatile, probably the most volatile one of the indexes that I typically track. And then you have the VIX, which is a volatility index. And obviously, as the market goes up, volatility comes down. And thank you, market, for not giving us very much premium on our naked puts and credit spreads and everything else that we love selling out there. When the VIX is low, that's when the time is to buy a little bit. When the VIX is high, you want to sell, but that's just a barometer. Okay, we have to be willing to adjust our approach to the marketplace, but that's kind of my expectation for the crude market, the gold market, the dollar market, and the equities market. This is Matt Justice for Tackle Trading. If you have not traded yet, but you want to get in the game, Tackle Trading is the best way to do that. The community we're building over there for all of our students is amazing. And it's something that can help you understand the markets, help you understand control, it can help you understand or help you getting away from the traditional retirement model. So definitely check everything out that the amazing mentors and coaches over at Tackle Trading are doing. And that's www.tackletrading.com.